All right, hello and welcome everyone to our second stream of the day, talking mostly about Bitcoin and other market analysis with Mark Wood. We're going to do another one of our patented full-blown deep dives. And Mark, the floor is going to be yours. I did do a video this morning. I don't need to talk about my views. Maybe I'll do it real quick on the hourly chart for the hell of it. Let me, you know what? Now that I said that, let me do that. Hey, congratulations to Ocean that just mined a block. If anyone's looking for a pool to mine with, Ocean Mining Pool is my personal recommendation. Oh shit! Okay, that changes things. I did not realize what happened to Bitcoin between 11 a.m. and noon. I was not paying attention to the market. I was setting up for the stream. I was catching up on other stuff. Still need to figure out who the hell Trump chose as vice president and his policies. But yeah, this definitely changes things. This morning when I was doing my stream, we were being rejected by the short-term hourly moving average. And I felt that there was a slightly higher chance that we're going to pull back. We're going to back test 60. I will get an opportunity to get into my allocation lower than I exited. I exited at approximately 62,000 with a pullback to 60 and then a reversal from there would have allowed me to get back in at approximately 61, 62 at or slightly lower than I exited. I'm still happy for my exit. If anything, I'm a little upset that, remember, I was only 20% long as of 65. So even if I get in right now, I'm probably still getting in quite okay at almost break even. And but I had a lot less sleepless nights than other people watching it drop all the way to 53.5. On our last show, you and I discussed there was a somewhat high chance that 53.5 was the low. We gave it a slightly higher probability, very slightly higher, that there will be one more low made. And we gave it a very low probability that we're going down to 40,000, which is Ugly Old Goat's target. And everyone that watches me refers to it as the Ugly Old Goat target of 39,000, which to me is 40,000. And now I am completely flipping. I know the long-term moving average is still declining. We are still under it, but we are literally right at it. Very, very likely later today, I will be allocating bullishly into my portfolio. Worst case scenario, I'm doing it tomorrow if we are staying above 65,000. We are at the upper end of all resistance here, and the upper end for me is that 67, 68. Technically, it would still be a lower low, but hey, if we break 67 and a half, I'm gonna consider that a, I don't know, quintuple top, and I'm gonna expect everything to just melt to the upside with very minor pullbacks. This last hour has just made me very bullish, and but this analysis is more yours. Let's see. Let's see your charts. You have any questions for me?
No, in fact, it's always interesting to me how you and I, we use different moving averages and different ideas, and yet our price ranges that we end up agreeing on are so similar. I kind of made a comment in some channels yesterday. I said, yeah, I was expecting a bounce. I felt like the weekly lows were in. I was looking for a move this week to at least 61,000, at least. And then here we are, almost 65. But at the same time, I said, well, I'm not interested really from a bullish standpoint until the price is showing us convincing closes above 65,000. However, I agree with you, 67 and a half is even, let's say, a little bit more conservative to where if we see price above there, yeah, we kind of have to get bullish again. So what's taking place today is not unexpected. However, I think I have something interesting to talk about starting off, if you want to check it out. Let me see. Do I have, yeah, I have screen share.
One second before I hand it off to you. I forgot to talk about the 4-hour chart this morning on Matt's show. Someone did point out there was an MRI top on the
Yeah.
4-hour
I was
at
going to talk
midnight last night. That was absolutely perfect. It looks like we had our 1 to 4 candle correction. We have now made a green star candle. We are breaking these tops. I mean, yes, we're pulling back right now as we speak, but based on how much we rallied in the last hour, I have to get back bullish here. The moment last candle, which only closed, I don't know, 20 minutes ago, something like that. The moment this candle printed a green star, closing us above the MRI top. I gotta get back to being bullish on the 4 hour, on the 1 hour, and I remain bullish on the daily, even though I acknowledge it would be difficult to get an MRI top. We would need to close above yesterday's high or print above yesterday's high. What's today? Tuesday? Today's Tuesday, Wednesday, Thursday, on Friday. I gave that a low. I said that was going to be challenging this morning because I expected us to pull back. I'm not expecting us to pull back all that much anymore. And also, I didn't say it this morning, but last week, Bitcoin ETFs purchased 18,000 Bitcoin. And yesterday, the ETFs purchased an additional 5,000 Bitcoin. If we look at the last several days of purchases, there was a lot yesterday. 4.7. We don't have Grayscale's data. I think Grayscale would have bought, not sold. And on a day like yesterday, so probably 5,000 yesterday. It was 5,000 on Friday. It was 18,000 last week overall. If the Bitcoin ETFs buy 25,000 Bitcoin this week, even with Mt. Gox returning people like 140,000 Bitcoin over the rest of this month, let's say, if these Bitcoin ETFs are buying 25,000 Bitcoin a week, they're gonna eat all that up. And yeah, I'm starting to get super bullish again, just based on the cycle chart and based on Bitcoin's liquidity. There's still a lot of people looking to sell once we get into that $80,000, $90,000 range. But man, the FOMO could be real. All right, I'm gonna leave it there. Mark, floor is yours. Go with your screen share.
Yeah, so it's interesting because I can kind of piggyback off of what you're talking about with the ETFs buying, and as what I kind of wanted to talk about first. And let me see if I can get this. Yep, I'm sharing. Okay, so this move here, I've been watching this pattern, considering that Bitcoin up here is in what we would kind of call a reaccumulation phase. I've had this accumulation schematic drawn for forever. I started drawing it in October of 2022. This drop, you see I have the question mark on the spring, and I can show real quick where this comes from. You know, if you just search Wyckoff accumulation, there's several different versions of this, but we can base it. Now, this is accumulation coming from a drop, which is what we saw in the bear market. And I can kind of quickly go over what all these means. But the point is, basically, you find support and you start bouncing around, trying to figure out where is resistance and support going to be. And then the spring is the most important part, because that's the bear trap. That's when everyone is convinced it's going lower and you have a strong reaction. And this is what I'm seeing with this current week. So really, really quick, if we look back in 2022, PS is preliminary support. This is an area after a strong bounce that kind of held and bounced into resistance. And then there was another strong drop. That is called the selling climax, SC. And then there's an automatic rally or reaction back into resistance right here. And then there's a secondary test down to where that selling climax went, and then some accumulation right here. ST is a secondary test. And then you have this bear trap right here, the spring. And we can see I'm on the 5-day chart here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13-ish candles. where the price is just lingering at those lows. We don't know. I was fairly confident the lows were in here. However, there was still at least, let's say, about a 20% probability of going down to 12 to 14K. But the longer that the price held these lows, the more it looked like accumulation to me. And up here, we have a test. So now I'm going to get into where we are right now. LPS right here. That is a last point of support. And if you look, we had this amazing trend line right here. And we broke out, tested that trend line. That was that drop to 20K. Absolutely perfect buying opportunity. And this is also what I would look to as what we call a bump and run, where you kind of break out of this trend line and then you have a drop to a lower low, which seems bearish, but we're just testing the support. And we have this move back into this zone. SOS is a sign of strength. This is the first move where you're like, wait a minute, maybe the lows are in. And this BU LPS is a backup test of support, last place of supply, last place of support, and then off we went. This is a classic, perfect Wyckoff. Now, and Wyckoff, there are some volume factors. I don't have volume on here. Volume is an important part of it. Like you can see this massive volume spike on the spring. We didn't quite get that on this current spring, but it's a smaller accumulation phase. So what I am looking at now is to see if 54K was the spring. And we've had this move out of breaking out of the trend line. This is kind of like jumping the creek, we would call it. So now, are we going to have the turnaround to test down here? I have a theory that we are, and it's because of this. So CME is sitting here with a $3,000 gap. And it's right in this zone of 57,000 that would be considered, you know, if I kind of draw a trend line here like this, and if we can kind of envision a move up here, and then bouncing back down, bearish, and then off. So is that going to happen? I don't know. I am still more of what they call a gap boy. Like, I know a lot of people don't pay too close attention to the CME gaps, but we still are in, I would say, a minimum of a 90% probability that those gaps do get filled. The other option we might have is that gap doesn't fill until the next bear market. That's a total possibility. We were talking about that yesterday. And let's go to today to see what exactly is going on. I think I have a really clear picture of, there you go. So this is exactly what I was expecting. We've had this premise that what we're experiencing with the price action now is very similar to this consolidation period in the summer, August, September, October. And I will tell you what these moving averages are. I've got specific ones highlighted. The pink is one that both Tone and I watch, which is the 128 SMA on the daily chart. And the green is a 55 SMA. That's just the fib number that I use. And I can kind of take these off right now. Oh, by the way, Tone, can you see how this is blacked out up here?
Yeah, well, sort of. When you put your mouse over it, yes.
That just started. I restarted my computer, and it started, and it's really frustrating because I can't see I can't see but
Yeah, there's a label that shows up, right? You have to
I can
read.
it shows
Um,
up, but okay, so here
Honestly, you know what I think? You know what I think it is? I think it's because you have a black background with a white chart. If you, it's in your overall general settings. If you're going to use white charts, you should use white backgrounds.
I know, but it's weird because it's never happened before. It's always worked perfectly fine. I restarted my computer and
I think it's got to be a trading view thing.
I think it is. I'm hoping they work it out. So I was, I am not surprised to see the price rejected here. Like I actually bought this for several reasons. However, when we put the MRI on, it's perfect. I love this. I mean, it caught that low to the dollar, but there were other things I was looking at to kind of give me confidence to buy this dip in this range. So if I were actually trading, like day trading, or yeah, let's call it swing trading, day trading, I absolutely would be taking profit right here. I don't know if I would fully exit. I would keep probably at least 30% of the position open, but I was fully expecting the price to get rejected there. Hold on, this is going to take longer than normal. So let's go back and look to see what happened back here. Now, these moves are never going to repeat exactly the same. They're just not. However, we can see 1, 2, 3, 4, 5, 6, 7 days, a whole week, tried to push above the 128. And then we have this move back down, which I'm kind of looking for, which would fulfill that CME gap and should be a massive buying opportunity, in my opinion. Anything sub 60K, I think, is going to be an opportunity.
Yeah,
And
see, Mark, this is where you and I this is where you and I differ, right? Well, besides the fact that I put zero emphasis on CME gaps, is
right, I
that
know that.
if the price of Bitcoin goes back to 57,000, I'm going to be bearish as hell. This is not a buying opportunity for me because it creates a double bottom. It completely opens up 48,000 with even greater confidence than I had when uh, we were bouncing off of 53, right? It's the last place I want to see Bitcoin is closing that CME gap. I would not be a buyer at that zone. Now, also, I'm with you. This area right now is rejection, but we already got rejected at 4 o'clock in the morning, at midnight, and we fell quite a bit down to 61 and a half, and we just went and made a new high, basically. And to me, this screams bullish. Could be wrong, but I think the rejection at 65, we saw it in the last 24 hours, and we're on the verge of breaking it later today.
Yeah, I know. I know that you're not like, I know you don't follow the CME too closely, and I've just I just am not ready to let it go because I do think that as Bitcoin matures, um, even the stock market, I think, has at least probably an 80% gap fill rate. Bitcoin's is still way higher than that. And so one of the rules that I use is that if it doesn't get filled by the Wednesday after the open, which is tomorrow, then I forget about it. I don't care. I just I let it go and let's see if we can start getting these daily closes above 65K. But it's always an area, and I know you don't like W bottoms, but I see this all the time. Where is
Yeah, real quick on the statistics that you were
yeah,
mentioning for
yeah.
CME gap fills. There are CME gaps and then there are CME gaps, right? So I would, that's another statistic I try not to pay attention to because, CME gapping, I don't know, 0.002% is not the same as CME gapping over the weekend for like 3%. So I would be careful with a statistic like that.
So so I I love these patterns, Tone. I love to see a W bottom with a higher low on the right side. I've seen hundreds of them in Bitcoin on every possible time frame. And if this happened, it would look bearish for sure, but it would test this trend line that would fulfill that LPS in the accumulation pattern, and it would close the gap, and we'd have a higher low. We've already printed. And here's another thing. So this is I kind of had this drawn up. We talked about this on a couple streams about how this is kind of repeating a pattern in gold, and gold did something similar. It came down here, lingered around here, and then broke out. In fact, gold is bullish today. But I would want to see this area hold. We don't really want to see the price dropping too far back into this zone, let's just say below 56 or 57K, because then I would 100% agree with you that we're opening up for lower lows. But right now, this is a bullish descending channel, broadening channel. So let's hope that it holds. But the point is, seeing the price rejected here is not surprising to me, and I would be 100% bullish with you, Tone, because look, let's go back to here in this summer period. 1, 2, 3, 4 consecutive closes above, gone, right? So if we see the price picking up 65.5K for the better part of a week, I'm gonna consider that mega bullish. CME gap, who knows? Maybe the other thing about that gap that I'm open to is the potential that it is a legit weekend breakaway gap, bullish breakaway gap, $3,000. That's mega bullish, and you can see that in accumulation patterns, right? When you have just that really strong move. So we shall see. This is another reason this was a really important move for me. This is going back to my 55 light green EMA that was crossed below the 55 SMA. I'm back on the 4-day chart right here. What we do not want to see is 57K flipped to resistance. And right here this is the summer consolidation period right here. The price never drifted too far below those moving averages, giving them time to separate to become stronger resistance. And the fact that this bounce is taking place above this cross, super bullish, in my opinion. We can see on this time frame that whenever, like, this cross has the absolute potential to end the bull market. I don't think that's what's happening at all. But if we go back to the 20K top, that was it. When these two moving average crossed, and during the run up, they never crossed. They came, well, there was one cross right here, and the price accumulated bullishly. So I'm with you, Tone. I'm bullish. I still think that a drop to 57K could remain bullish. Below that is when I start to get a little bit concerned. And we can look at this really quick. I'd mentioned on the last stream, right at the very end, that I was watching this weekly stochastic RSI. I mean, it just was screaming a low was in at 54K. Historically, that was it. It had never dropped below. So now what I'm looking for, we can see, I was watching to see if we were going to get, I'm sorry, right here in June, we had this cross, and then they turned back around. The fact that the blue is trending up into the 27 range is bullish, but we need this to follow through up to 30. And once that happens, we could see something similar to right here in January 2024, which took the price from 38K all the way up to 70. So as long as we keep seeing some follow through this, it's super, super bullish. I wanted to take a look at gold. We can maybe go back to Bitcoin in a minute, but I wanted to take a look at gold because it's having a super powerful move today. It was kind of pushing on this horizontal resistance around 2400, 28, and just today has taken out the swing high of May 20th and is now at a new all-time high. With, let's see, where are we on MRI? Plenty of room on daily, with maybe a little resistance right here. So gold I'm looking at as very bullish. And let's go back and take a look at the NASDAQ. The NASDAQ is interesting to me, and I might wait. Oh, here we go. So Tone, yeah. Did you see this? Hold on, I was just showing I'm
very bullish on gold.
Yeah, very bullish.
Very, very bullish on gold.
I can't find the hide button. So frustrating. So yeah, it's printing a new all-time high. Today it took out this swing high, and it's printing a new high. I'm waiting for this. So this was here. Look, here's a classic W bottom, double bottom, but we get this higher low and you get some massive follow through. Like, I like these patterns a lot in markets. What I'm wanting to see for Bitcoin versus gold is maybe this area 0.039 to be resistance and turn around, and that will become mega bullish for Bitcoin versus gold. But check this out, Tom. What are your thoughts on the NASDAQ? So here we are on monthly, and with the MRI on, we are on a top at the 1.618, right? Time to be a little cautious, maybe? Or are you bullish on that?
Yeah, I remain cautious on the markets. I mean, these S&Ps on a monthly MRI top as well. And also on the weekly, right? Like the weekly, if you flip, just make it a weekly chart. Like we hit an MRI top 2 weeks ago. We're, second red week in a row so far. Like it's still pulling back. I would still be very, very cautious with the traditional markets.
So I see this last candle right here, the week of July 8th, as a potential top.
Agreed.
Yeah, potential top. If this swing low gets taken out, which is where 20,163, then my target for the shallow drop is down around 20,000.
Yeah, I mean that's what I said. What's the percentage on that? About 10%?
Let's see, from the top.
Sure.
About 5%.
5%. Yeah, that's reasonable. I have a slightly lower target if shit hits the fan before October, and that's all the way to the prior MRI top.
Around, yeah.
A little lower than that. The prior MRI top. A little lower than that.
Around here, right here.
Yeah.
Yeah. Mm-hmm. Yep.
That's my worst case scenario for the stock market.
I could see that. It would take it right about to this moving average right here, the 34. 12.
Yeah, well, by the time it gets there, it will be way higher.
Right. That's gonna trend higher. Yeah, I agree. Plus, also the other thing I find interesting about the monthly MRI top is going back to my analysis of the election cycle.
Dude, the NASDAQ rally from October, where markets always rebound, from that MRI buy to now is insane. No, the MRI buy back in
back here.
22.
Oh,
No,
back.
the
Oh,
MRI
this.
buy. No, 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 no. Where your giant red arrow is, there's an MRI buy
Right there.
right there. Yeah.
Yeah, yeah,
The
yeah.
rally from that MRI buy is insane.
Absolutely.
Absolutely insane.
Yeah. But so I have, if you remember what we talked about a couple of streams ago, just looking at election pattern cycles, typically, not always, but typically the S&P, NASDAQ puts in a top mid-August to September. And so the fact that we are on an MRI top on the monthly, sitting at that key Fibonacci, I think it's going to be really difficult for the price to push too much higher prior to the election. And then, yeah, we look for a bit of a correction. And typically, not financial advice, but typically October 31 to November 10 of the election year is a buying opportunity as the markets are dipping. So we'll keep a track on that and see if we might get that to play out. So here we are, halving cycle. We are on day 84. I still think price can remain below the all-time high until around 150 days out, bringing us into September, October. I don't see anything that's taking place abnormal. Tracking along with that. This is interesting. I mentioned last week that we got this candle close, the 3-week, it was actually on 3-week, a red candle close, and then the 2-week bounced right off of the mid band. That's a buying opportunity until it's not. And we can see that failed here, kind of got knocked around. You probably would have gotten stopped out trying to buy this long-term swing trading. But in general, in a bull market, the middle band on the 2-week chart is a potential buying opportunity. What we want to see now is the orange 8 EMA picked back up as support, currently at 62,650. There's 12 days left in this candle. It is a Heikin-Ashi candle. So we'll check back in. 2 or 3 closes below this becomes a little bit worrisome. You start to see something like this, these tops here, or even this top at 65K. So that looks bullish. Here is the hash power. We're seeing a slight recovery from the mining industry. We can see the hash ribbons have leveled off and are starting to curl up. Still not telling us that they're out of the woods, but if the lower moving average of these hash ribbons crosses back above, we will get a buy signal soon after that. The buy signal will be coming typically once the lows are confirmed to be in. So that is something that I'm continuing to monitor. And let me see what else. Oh, so here we are. Tone Base used Consensio to his advantage and was rightly exiting the market below the close of this black moving average, especially with the yellow moving average closing below it, crossing below it.
Yeah, that's where I exited about 80%, and then the final 20% was removed at the top of the big red candle that followed it. Nope, the next one. That's when I removed 80%, and then at the top of the next red candle, that's when I removed the final 20.
Right. And so this is a great example of just trusting your system and sticking with your system, right? Tone is not going to have any issues if he didn't buy this dip. He's not going to care.
No.
It would be nice to have bought the dip, but if we start to see candles closing back above $65,000 here on the 4-day chart, you're going to want to be entering again. And we can look back here again, taking a look at this summer consolidation back here, we can see 1, 2, 3, 4 or 5 candles rejected below. So again, I am not surprised to see the price pausing at 65,000. I would be surprised to see closes back above there. However, with the buying pressure of the ETFs as a fundamental factor and also a technical factor, we could see very quickly a strong move back above 65. So, and this is one thing I love. This moving average system can be used in so many ways. So even the weekly whipped you around. And this is how a spring in accumulation works so well, because the bulls finally give up and they're like, okay, I got to check out. If you entered on this system, you were entering down here in $28,000, $30,000, you've got a nice profit that you're wanting to protect. And the week that you start selling, the price turns around and we have these 2 bullish weeks. So on Consensio Weekly, also we're getting a signal of $65,000. We need to start seeing closes above the intermediate moving average right around $65,000. I love when I can look at 3 or 4 different systems and it tells me the exact same price range. That just gives me a ton of confidence in my analysis. And Tone mentioned earlier in the stream the importance of 65,000 and 67,000. And here we are looking at several different views telling us the same thing. So Tone, are you going to enter back in with a 4-day close above 65K?
Yeah, I need a little more than just a 4-day close, right? I mean, it could luckily close above 64K. So I was almost ready to open my trading account and enter if you make this an hourly chart. If the current candle was doing the exact opposite of what it's doing right now, I would have already been entering. But because the current candle is dropping, I'm not entering yet. Okay, the prior hourly candle closed above all prior hourly closes, and the current hourly candle started trading above all prior hourly highs. If I had confidence that this hourly candle and this 4-hour candle that just started as well, if I had confidence that this hourly candle and 4-hour candle were going to close above like in the vicinity of 66, I would have jumped the gun and went in. But because of what the current hourly candle is doing, I am still holding out. I would rather watch it pull back to the moving average of 63,700 and then start making the ascending triangle. And then like if I'm getting in before any significant closes above 65,000, I want to be absolutely sure, and a symmetric and an ascending triangle will do that for me.
Yeah, that makes perfect sense. One thing I like to look for, I'm kind of afraid to hide my price. Hopefully I can get it back on. Yeah, I can get it back on. One of the things I like to look for is patterns in moving averages. And we can get these types of patterns if we're looking at RSI and some oscillators. And right here, we're kind of getting a little bit of this W bottom pattern between these 2 moving averages with a higher low over here at $64,000, $63,500. So even if the price drops down to here, 63,000 or wicks a little bit below, but we keep this higher low on price of 63,000, there could be another chance to continue to push higher. But again, we've taken a look at that resistance on the higher time frames, on the daily, on the 4-day, even on the 5-day chart, look, we've got the long-term moving average on the 5-day chart also at 64.7. So there are a lot of systems telling us 65K is a key area to watch. And then before I get off of this real quick, I just wanted to go back and show how, if we're just looking at structure, just pure structure, and you're trying to figure out, are we in a bearish trend or a bullish trend? I just really like Consensio on the 2-week chart, because anytime the price is approaching the black moving average, the bullish trend, the whole bull market is in jeopardy. And we can see here in June 2018, this one close below, it kind of confirmed at the end of the party, is really interesting. After this run up to 14K and the drop to 65,000, this was the base. And had price been able to continue to trend up here, we would have avoided this COVID crash. But you can see clearly what happened once it was very obvious that this support area was not going to hold. We had a capitulation. And 65K, the 50% correction from 65K to 28K touched the moving average perfectly as it was rising. And then after the 69,000 top, we've got one close below and it's lights out. That moving average is now resistance, and we're in a bear market. So this still tells us we don't really want to see the price trending this low, but this tells us, even if we lose this 53K low, 54K low, there's a little bit more room to test this support right here. And then after that, we're kind of in trouble. These moving averages on Consensio they're just so good. And I'll show one other thing, Tone, and maybe we can talk about, I'm curious to get your opinion on some of the things going on with the yields. So now, if I put the short-term moving average back on, and let me get rid of these. On monthly, we're seeing just what we want to see. I would love to see this monthly candle close green with maybe even a little bit larger body. That would be a beautiful reversal candle down to support. And I would be very, very bullish for...
Yeah, you want to see the second highest monthly close, right? You want to be above the prior green candle.
Yeah, like up there, that would be mega bullish. But even if it was a close above 65K, 67K. But yeah, so here we are, Tone. Look, you said 65, you said 67.5. That's the high close of this monthly candle right here. So, we've been able to identify this price range between 65K and 67.5 as very important. But this is what's intriguing to me. Since this top and since our very first stream, I have been cautious of a test of this moving average, especially once I believed the 2-month confirmed. I believe what's going to happen is this moving average is going to trend higher, and it's going to look like a test in history. When we go back in history, we're going to see that this orange moving average is going to just cross right into that, and it's going to look like a perfect test. It'll end up looking something like this, or this, or this. And we don't know. We'd have to go back and look. We don't know for sure that the price actually dropped down to the moving average, or did the moving average climb into the price. But I'm becoming much less concerned about testing this moving average, because this drop to 54,000, right? The last close went from 47.5 to 51.1. So if we get another $4,000 climb, this moving average is going to roll right in there, and it's going to look like a test, and that's going to fulfill my most bearish scenario. So this drop to 54,000 was absolutely golden. Was golden for me. Let me talk about this really quick, Tone. I got to find. Okay, I shared this. Let me see. Let me go on like maybe weekly. Yeah. So I'm curious to get your opinion on this. I've been watching this 10-year, 2-year yield for literally 2 years. Like 700, we're in day 735 of this yield curve inversion. And this move, I believe, is significant. I think we got a confirmation of a bottom. Sorry. I don't need this. I don't need this. Right here. This, when you get the yellow 21 crossing above the green 55 on a weekly, that is time to pay attention that a bottom and a low is probably in. And we can see this moving average. Both of these moving averages have been tested for a long time. And we have this move above. So what are your thoughts on the potential reversion of the 10-year, 2-year, Tone?
Not much. I don't have many thoughts on it. We will see. I just don't see a US recession in the cards. And I know that the yield curve inversion tends to be the cause of recessions. I think that we've never seen something like this with mounting national debt and deficits without any comprehension by the current politicians that these deficits are a problem. I mean, they really are spending like the end of the world is near and they just don't care. So I honestly, I think, oh, you see where your cursor is right there? Put your cursor on 0.
On 0?
Yeah. Oh, no. Just yep. Well, so that there's a line going across the whole thing. Yep. Perfect. Okay. So notice how in your entire chart going back 40 years, we've already spent the longest consecutive time in that zone, right?
Yes.
Even if you
By
take 2000 and even if
by
you
a
take
lot.
2007, say again.
By a lot. If you look, this is why
Well,
this is
well,
why I
hold on,
want
hold on. Let me
to go ahead.
let me just finish my thought, right? Even if you combine all of 2006 and 2007 without, like, if you eliminate the flip-flopping back and forth below 0, even if you assume that once it first dropped below 0, it stayed there the entire time. That's what I would do if I were you, by the way. I would even a little further left on that
Yeah.
end, right? All the way to the front. Yep, right there, right? We've already gone further,
Yeah.
assuming that was consistent all the way there. And honestly, I think we're going to be down there for another 2 years.
2
I think
years.
what is happening right now is completely unprecedented. We may jump back up like we did in 2006, and then within 3 or 4 months, we'll be back down again. I think we're looking at that 2006 to 2007 situation for 4 to 5 years, and potentially not even a swing above 0 at any point. And while it's great that the inverted yield curve tends to, predict or be the cause of recessions, something like this is so unprecedented, I think it's going to delay a recession.
tend to agree with you, actually. I have said, like, if you really sit down and study the money printing of 2020 through COVID and look at M1 and M2, this is a new paradigm. Like we might be in a scenario where decade-long patterns might not work anymore, because of what is going on fiscally and financially. But just to kind of play devil's advocate here, and I know I'm not calling for doom and gloom. I'm not calling for a recession. However, if patterns do repeat, and let's say it is 2 years out, when this does revert, I've just kind of highlighted these what it leads to in the S&P. And basically, the average of these moves, I believe, was around 32%, a minus 32%, with 55% being the extreme. And 10%, we can kind of look at this because it was 2 years separated, being the nominant. But this would kind of line up with my premise of a stock market top in the election year, a 10 to 20% correction as we start to get a rate cut with the yield curve reverting. Like some stars are aligning to allow that to happen. And there are other economic factors in play. Like we have unemployment above 4%, and it's going to be very, very difficult to keep that below. We have credit card debt for people in the United States of America over $1 trillion, but it's been over $1 trillion for almost a year now, right? It's not severely impacting everything. We also have savings, U.S. bank account savings, back to pre-COVID lows, basically back to zero for the majority of people. So savings accounts are being depleted. Commercial real estate is tanking. Housing mortgage defaults are rising. So we're in this environment where historical things you kind of look for to leading to recessionary environments are in effect. And yet, we see the stock market rising. I think it's foolish to get bearish on the things I'm pointing out. I am not pointing them out to say, hey, we need this is gonna crash. I'm just saying we're seeing things in effect that have historically been things to pay attention to, but the markets just continue to keep rolling along. So I wouldn't be surprised to see a slight correction, maybe as much as 20%, once we finally get a confirmed top in the stock market. And if we get this, I don't know. But you know what? It's interesting, Tone, your idea of not going above zero. I hadn't thought about that, but I think you might be right. And if y'all can't see, I have highlighted the time period, 346 days. If I move this back here,
that I wouldn't do. That spent over a year above zero. That's a very different scenario.
That's a different scenario. This was a very, very quick.
That was a specific event. I think that was long-term capital management havoc that blew up, Russia and other countries.
And if we combine these two, as Tone mentioned, we're at 516 days, and this is 730 days. Like, this is the absolute longest that this has ever remained in this scenario. And you are right, this could continue to just wander and wander and wander and never even come close to 0% for quite a while. But do you think that the rise in unemployment, the potential ramping up of this, is going to allow the Federal Reserve to make that cut in September? And if so, how much?
I am very confident the Federal Reserve will lower the interest rate by 25 basis points 25. In September. And that's it. That would be the only lowering of the rate, and I don't think it will make any difference.
Yeah, so unemployment is at 4.1. It's ticked up above 4. It's very difficult to push it back below 4. I do expect this to continue to rise. How high it has to go in order to really start pushing on that recessionary button, I don't know yet, but
I think it needs to break 5% to hit recession.
5%?
Yeah.
Okay. And
I think it needs to, and I don't think it will break 5%, right? So neither administration is incentivized to get that number above 5%. They fudge this number quite a bit, and I think they're going to tick it up in order to get that lowering of the rate. There will be 2 more inflation hikes, 2 more inflation readings. The latest inflation reading was very low, and I think there will be 2 more inflation readings that are going to come in pretty low. Unemployment is going to tick up to 4.2 or 4.3 next month. There are actually 2 more readings. No, sorry, there'll be 1 more unemployment before. No, 2 more unemployment before September, and 3 more CPI readings. That's plenty of time to get the CPI consistently below 3 and unemployment consistently above 4.2, and that's enough for Powell to lower the rate. Everyone will be happy. Everyone will get off his ass, and then he's going to keep it where it is.
so typically when those rates do get cut, we do see a bit of a correction. So this is kind of what I'm projecting in the S&P. For Bitcoin, it's a little bit different, but we're looking at these MRI tops. We're getting closer to the election cycle. My TA fundamental analysis says look for market tops mid-August to September. And then a September rate cut is going to coincide with a little correction in the stock market, maybe 10%, maybe a little bit more. And it should be, then things should be set up bullish for the rest of Q4 into 2025. That's my projection until we're shown information different to that. Do you agree with that or disagree?
Yeah, I pretty much agree, other than the bot monkeys have been trained to be bullish on the stock market on an interest rate lowering, right? So the moment Powell announces that he's lowering the interest rate, I can envision a big bump in the stock market, not a decline. Now that bump could be then can then taper off and make a
Yeah.
low later. But the
Yeah.
initial, 48 to 72-hour reaction is going to be to the upside off of an interest rate lowering, unless everyone is so convinced that the lowering of the interest rate would pump the market that they pre-run the and the market rallies into the announcement, and then the announcement becomes a selling event. So we don't know which of the two is going to be, but either the pre-telegraphing of the interest rate lowering or the lowering itself, the initial reaction will be to the upside.
I agree. I do agree with that. I also agree, though, or I believe that we will see a slight sell-off at some point, because I do think that the market has been rising for 2 years on the anticipation of a rate cut. I do believe that it might even ramp up into the announcement. And we could see a quick pop, maybe a 24-hour pop, and sell. All right. So before we close it, let's just talk about a couple of long-term bullish things that I've been looking at. I'm not a big cloud person.
Neither
However,
am I, but it looks very bullish.
it's very bullish. So this is the 2-week chart. We can look, what I noticed this several candles ago, but I'm just watching it unfold. This is a TK cross right here, which took place in February 2024. We've only had a few of those in history, and this was one in October 20. When that took place, the price was lingering around 12K, and we know what happened after that. And then back in 2016, we got the cross, and the price at the cross was $780, not even at the new all-time high, and we know what happened. Now it is interesting. This was a massive drop, but it is worthwhile spending time learning about about this indicator, because that drop right there, that was a drop from $770 right down into the support of 465. That was it. Like, that was a massive buying opportunity. To equate that, and this is what I find interesting, that area is sitting at 44K, which is what Consensio 2-week told us is our bottom line, right? And we can see right here, in after the 65K top, there was one 2-week candle close below this key level of support, but the next candle bounced right back above it. So this particular drop didn't even bounce down to the 50K range. I think it could have gone to 50K and still remain bullish. So just from a long-term standpoint, this is a very this is a very bullish structure. And real quick, we'll look at daily.
Yeah, I was gonna. Can you pull up before you go to daily? Can you pull up weekly?
Weekly, yeah,
That's very, very strong.
very bullish. What we you know, we've got a green cloud here. We've got a bullish cross that actually has been in place for a long period of time. So until the price is dipping into the cloud, which the top of the cloud is at 50,000 right now, the structure is quite strong. And I did want to look at daily real quick, because if we go back to the summer consolidation period, we can see the price dipped all the way down to the bottom of the cloud, and there was a bearish cross, a push through, and then one more drop down below, which is where we are now. So here is the cloud. We drop below, and the price is pushing back up into it. But we can look here. Things didn't really get bullish again until this area at the top of the cloud was support, and we had a bullish cross again. This was at 28,200. So to repeat that today, we would want to see the price shockingly trending and holding above $65,000 to $67,000. So here we have a completely different system telling us the same information we've been looking at throughout the entire stream. So, but it's bullish. It's currently bullish that we have the price back inside of the green cloud. What we want to see is closes above and holding above. Currently would be around $66,400. So we're getting a mixed signal daily candle today. It will be interesting to see how this candle closes and what the next couple of days bring. So that's about all that I have, Tone. Do you have anything else you want to cover?
Not really. I'm thinking what other charts you could pull up that are interesting before we
Oh,
close
there is.
out.
Yeah,
Maybe glance at Tesla and Nvidia.
sure.
Oh, you know what? Can you glance at one more thing?
Sure.
Apparently the Ethereum ETF's coming. I mean, I couldn't give uh, a crap, but I don't know how much attention you pay attention to shitcoins. So maybe pull up the Ethereum chart, see what you think.
Let's see. I'll just go to Binance. Oh, let me get off the line.
Personally, I like the Ethereum versus Bitcoin, not dollars. I mean, everything looks like Bitcoin against dollars.
That's what I look at, actually. I'm always looking at this chart. And let me see. I do have drawings on this chart. Yeah. So this is just a long-term chart. We saw Ethereum versus Bitcoin dropping out of this massive triangle, and it's been holding above these supports. This is probably cleaner. My bird is being a pain in the ass. Pipe down. So yeah, I have this I have this support on. So I think if Ethereum versus Bitcoin drops below 0.043, it could be in a lot of trouble. But currently, it's kind of just holding in a very nebulous sideways range. It would begin to get bullish climbing back above these highs and these highs, but it just doesn't look, it doesn't look interesting to me. I don't see anything. Like if we are Ethereum bulls, I do see one. Nah, it's not really. I was thinking I might see like a bull flag, but it's really drawing out. It's drawing out quite a bit right here. We do have another consolidation triangle forming. That might, let's see if I can, there you go. That's good. So this is suggesting nothing exciting until maybe August of 2024. And maybe if the Ethereum ETFs do pass, we might see ETC, BTC breaking out above here and making a strong move. That's possible. Do you see anything currently interesting on that tone?
Just see massive consolidation. It had that big run up on the ETF, on the Ethereum ETF news.
Mhm.
That was that big run up in May. And I think when it launches, it'll be a sell the news event.
Yeah, and I don't know, I don't follow too much about Ethereum. I know there's all kinds of speculation regarding staking. Are people going to unstake their Ethereum, and will that create strong selling pressure into the, will they be unstaking and buying the ETF, and will that cause a drop in price? I literally have no idea about anything like that. There is one so we've touched on this, but this chart just continues to stay bullish. This is the Valkyrie ETF, Valkyrie Miners ETF, and it's currently bullish, super strong. This is the daily chart. I probably have these resistance on weekly. Yeah. So it's continuing to push to new highs, and it's running. It has a little bit of resistance, basically between 2670 and the all-time high. And then I think this could be very bullish after Bitcoin finishes consolidating and once the miners fully recover. This has been a really powerful stock. Do you have any opinions on this, Tone?
It looks bullish to me. That's all. But it is due for a pullback back to the trend line a bit. I'm surprised the mining stocks are doing so well. But hey, if Bitcoin is about to pop to 80,000, the mining stocks will do very well.
Well, but what's interesting is let me find my mining stocks. They're not the sector isn't running in tandem. Where the heck do I have them? Here they are. Okay. So if we look at CLSK, that's bullish. That broke out of this massive consolidation this week. So CLSK has had a really powerful week and it's looking really strong. Riot, similar. Riot has had a breakout. There is a big gap down here to pay attention to. But when I looked at Bitfarms, okay, Bitfarms is moving this week, and Iris Energy, which has been super bullish, is not running quite as strong. It's interesting. These individual stocks, they do kind of move together as a sector, but it's still young. And what we're looking for with Iris Energy is a move above this 6.18 around $18. And we can see it's wrestling with these two Fibonacci's here to try to find support. once above 6.8, once above 18, I think that stock is going to get quite bullish. There are two stocks in, I guess we would call it the weed sector, that I've been watching. MSOS is a cannabis ETF, actually, and I own a little bit of this. I'm believing and hoping that this $5 range was a generational low for the entire sector, but man, it's just really not doing anything. It's like the sector is waiting for some more regulation or some more clarity, and it's just lingering around here. But here's my hopium, is that from the current price back to the all-time high is a 600% move. Now, will it ever get back there again? I have no idea. But I put a little bit of money into that under the premise. And then this one is interesting. This is a company
Can
called
you go? Oh yeah, you're still on the wheat sector. Okay, so finish this up and then pull up Core Scientific.
Okay. So this is called MNMD, Mind Medicine. And this is a really interesting company. And I am currently liking this breakout right here. This has been a lot more bullish in general than the MSOS ETF. But this breakout right here, it's possible. I still don't think this is ready to run. It's possible for this to turn back around, do the bump and run, test the support around $7. And again, with this one, to get back to the all-time high would be a nice little run of from current price of almost 1,000%. So that one was one that was worth putting some money in. I think it would be wise to get out if these swing lows right around $6.50 gets taken out, because it's probably going to turn around and drop much lower. But that one is interesting to me. What did you want me to look for, Tone?
Core Scientific.
Do you know the ticker for that?
Yeah, CORZ.
Wow.
It's the company that went bankrupt and then they relisted, and here they are.
Yeah. Look at, I can kind of see, I can kind of see this, a bit of like this ascending triangle that developed right here. And it's breaking out right where you would kind of anticipate. Let's see what kind of move we might look for. Up to $13.5 maybe. So where is this on the MRI? Green Star. Are you buying that today? Like not
I'm not, but
no?
yeah, I don't like to speculate on shit I don't understand.
Mhm.
Like GameStop and AMC and something like this, which went bankrupt, and I don't really understand why it's even publicly traded again. And I don't really have the time nor patience to look into why it's being publicly traded. My trading revolves around, NASDAQ 100 stocks, S&P 500 stocks, companies that don't have like something that I don't need to be in chat groups on, or set an alert on my phone. I like to stick to higher cap stocks, even if I was to be trading Bitcoin miners, it would be Bitfarms and CleanSpark, and that would be the list. Even with Mara and Riot, I just have too many questions. But something like this, I don't touch it. But some people are doing well.
So Tone, here's an example. Here's example of the W bottom with the higher low, playing out perfectly. So
Yeah, well, I don't have a problem with that. That is clearly a higher low, yeah.
yeah, yeah,
But, and here's
yeah.
a but. Put your cursor back on there. Put your cursor back at the low, right? at that moment, at that exact moment, I am not bullish, right? Because I can't assume that it's going to reverse. I am only bullish on that green candle that closed above the red, right there, right before that, actually.
Here.
Right there. That is the first time I can be bullish on this stock. You can say I could be bullish on 2 candles earlier before it turned into a doji candle. So that's the only other time. So again, if you put your cursor on the doji candle before that, right there, right? And now move your cursor out of the way. So on that doji candle, I am bullish at the top of that candle, but not at candle's close. And then the following day, I'm not bullish again. And then only at the close of this candle am I bullish. And would I be buying at the end of that day? Maybe, right? Well, obviously it depends on the asset, right? We're like ignoring what asset this is, right? I'm
Right,
just
right,
talking in general, right? I may be
right.
buying at the top of that candle, getting ready for the big following day, or I may be buying on the pullback to close that gap. But yes, it's a W pattern, but no, that W pattern at the moment of that second W is not very useful.
So, if you're kind of like that, if you're if you're if you're if you are kind of a knife catcher, or if you're trying to find, trying to pick up this higher low, if you're really convinced this is a low and you're looking for this to go back into an uptrend, I find that like the area around the 786. So what I did is I took this Fibonacci from the low up to about the range of the highs where the move started. So I reversed the Fibonacci to show a retrace. This area is often a good place to look for a dip, and the 886 is the perfect dip, and that looks like a W bottom. Like that actually looks even more bearish because
I
you're
know, I know. I don't like them. I don't like either of those. I wouldn't be buying at those. There are instances when to catch a secondary falling knife. Personally, if I'm not catching the original falling knife, like the crash on COVID for Bitcoin down to 4K, I mean, I called that falling knife. And other than that, I need like the stars and the moon and Jupiter to align, which is what happened on the secondary low of 20,000 in like April or whatever it was of 2023, I think, when we rallied from 15,000 to 25,000 and then pulled back to 20,000. Everything aligned on that 20,000, from moving averages to MRI to reversal candles to everything on everything. So in order for me to buy that secondary low as a knife catch, I need everything to align. And in this particular chart, nothing is aligning for me.
so just as a possible strategy. This is if you happen to just be like speculating, and you're not, I wouldn't be risking a ton of money, and I certainly would not be on leverage. But if you bought this 886, like if this had dropped down there and you could set a stop just below this swing, you're at a 4.5% loss, right? With the potential of 95% move, and where the price is now, if you just happen to hold that low, you're looking at, so it's a very, very, very low risk reward, but you have to study these. I'm almost positive that the 15K bottom was the 886 retrace. I'd have to go back and look on Bitcoin, but it was getting very, very close to it. So 15K was becoming super, super low risk, even though there was a possibility of going lower. Okay, real quick. Oh, this is interesting. This one. So this have you heard of Vital Farms, Tone? Like
No.
if you go into grocery stores, I see they put out like true free range chicken eggs. I think that they're a company trying to put out non-poisonous food for people. And I've been finding this interesting, how strong this stock has been, as people are learning more and more about how toxic our foods are becoming in the United States of America. And, this is interesting here where we have an all-time high breached. And it's, one thing I've been meaning to ask you is I've heard you for years say that you are always bullish when an asset reaches a new all-time high. And I understand why. But I have observed through the years that when an asset goes back there, and it doesn't matter, there are always going to be people selling into that high.
I'm not bullish on this chart. I mean, it's
Well, not right
um
now. Not right now.
right, not right now. No, I mean it got up there way too fast and it took way too long. I mean, this is more of a cup and handle for me in the making.
Yeah, I can definitely see that. But this is one to watch. Selmer Scientific. I don't know why I have that one highlighted. There must have been a reason. I heard about it, but it doesn't look like anything is happening with that one. Okay, this is good.
All right, I think we're good.
Yeah, we're looking good.
I also think my camera's frozen.
Is it frozen?
Maybe. Oh, yeah, I just reset the camera.
A
All right,
huge gap in BlackRock, but there's gaps all over in this one. I don't even know.
Yeah, again, I don't care for gaps on tickers that don't drive main liquidity. So this
Not
is
on
why
not on
I
these.
find CME gaps irrelevant.
Yeah, not on this. But this is bullish. That's a bullish chart right there. ETFs are looking good. All right, Tone.
All right. Let's end screen share, or I'll just take it over.
Yeah, take it over.
Like while Mark was talking, I happened to draw this ascending triangle on the 1 hour chart. Let's keep an eye on that. Someone asked me, what would I do with my allocation? Well, if I have to enter in the near future, I would go maybe 30%, maybe 50%. But if this plays out perfectly and continues, pulls back down to just below 64, goes back to 65, pulls back down to 64 and a half, goes back to 65, and starts to break out, like tomorrow afternoon, strong, I may just go 100% in. I'm willing to go in 100% with a declining 30 period moving average if I am super confident we're about to break to 67 and a half, because then everything here is going to reverse super quickly.
So real quick, going back to that very original accumulation pattern I was talking about, that is probably the most bullish thing that has been happening for Bitcoin. Just that long sideways period. And the longer that it kind of stays sideways, the more momentum that's building. Like when I say sideways, I'm kind of talking below $70,000. The more powerful I think the move can be to follow after that.
I mean, the most important thing people need to know is I will definitely be 100% long before Bitcoin breaks 68 and a half, right? So if I extend this dotted line is at 68 and a half, let's say. Before Bitcoin breaks 68,000, I will be 100% long no matter how we get there, whether we get there in the next 3 hours or we get there sometime in October. By the time Bitcoin breaks 68,000, I will be 100% long. That's the important takeaway. And hopefully I don't have to mess with this 100% long for the next year.
Okay, so let's end on this. I hate predictions. I don't like making predictions, but let's make a prediction on when we think Bitcoin is going to make a new all-time high. And I'm not talking about $80,000. I'm talking about when the price is going to tick back above the prior all-time high.
I think late September, early October.
Okay. I'm going to say mid to late November.
Wow,
So
you're later than me.
I'm later than you.
This last couple of days has made me very bullish.
It looks good. It looks good. I agree with
These
you.
last couple of days has made me very bullish. By the way, we could also have a new all-time high next month, very
Yes.
easily,
Yes.
very,
Absolutely.
very easily.
Totally agree. But if we'll see, if accumulation continues to go like it is, and I'm kind of also basing that on the idea that Bitcoin really doesn't make a new all-time high until November of the election of the halving year. But that's not the main reason. I'm still thinking it might take a little bit longer to brew. So we'll see. We'll check back in on this in a couple of months.
Right. I say the more important question is, out of 100, what is your probability that the lows will not be broken? 53.5 will not be broken to the downside on a scale of 1 to 100. How confident are you that we will not break below 53.5?
Prior to this current move, it would have been much lower. But what we're seeing now, I'm going to say 75% probable that that was the low.
I'm with you. I'm at the same level, and yeah, I guess that's the really important one.
Yeah.
I'm with you on that. About
Yeah.
70 to 80%. You're at 75. Okay,
75.
guys. Thank you all for watching. We'll be back with Mark next week, unless something crazy happens, and maybe we'll bring him back earlier. Check us out again tomorrow morning with Matt McGregor. And at some time there's going to be a cool interview on my YouTube channel tomorrow evening. I will be up in, well, actually, I'll post it. I'll probably post it up tonight. Check it out. The company is called Ocean Builders. Google them. Really, really cool. They make these great sea pods. I will be up there checking it out and bringing you an interview on my channel about cool places to live and get away from clown world that you're witnessing in other parts of the world. All right. Bye, guys.